Hey, my name is Scott Phillips, and today I'm going to get you up and running Scalping FX. Now, scalping is a type of trading where we're taking several, usually a minimum of one and probably up to 5 or 6 trades in a day. Those trades are typically very short duration, so in and out inside of 30 minutes as a general rule, and they are generally, scalping systems are generally very high win rate. And the advantage of a high win rate intraday system is that the law of numbers works in your favor. So what I mean by this is if you're trading a system where your trade lasts a week, you have one trade, you lose that trade, you have another trade next week, you lose that trade. The third week, you're like, oh, wow, I haven't made any money for 2 weeks. The third week kind of sucks. There's a lot of pressure on. Whereas with scalping, if you have 3 losing trades, chances are you restore some pride and you're not down that much at the end of the day. So these types of trading methods give us a much smoother and more consistent equity curve, and they're generally better for people with small accounts. So let me start from the beginning. First of all, we're going to set up our charts like this. So you can use any charting package at all. It doesn't matter which one. Whichever one your broker uses is fine. MetaTrader is fine. MetaTrader 4, MetaTrader 5, they're all fine. Thinkorswim, fine. NinjaTrader, fine. Multicharts, TradeStation, fine. The one I use is TradingView. It has a free version, so you don't have to pay, tradingview.com. And the way I set things up, you click on this button, indicators, to add indicators. And we're going to add average true range, and you can search for it by average true range. I've got it highlighted. The next thing we're going to add is these bands. These are called Bollinger Bands, and what they are is 2 standard deviations away from the middle. So what this is if price action was normally distributed, these contain 87% of the price action. So 87% of the stuff is in between, and 13% of the stuff is outside. So this is outside, this is in between. So the basis of our system is that it's a nice place to look for mean reversion, or to look for going against the move at these Bollinger Bands. So we would try and go long at this Bollinger Band, short at this Bollinger Band. We don't give a setup here, long at this one. And that tends to work pretty well. It gets us in and out about 60% of the time. So let me show you how we add this Bollinger Band. We type in Bollinger Band in the search, and we use the standard parameters. And the standard parameters are a length of 20 and a standard deviation of 2. So you don't need to change anything. Let me just... The last 2 things we're going to add are 2 exponential moving averages. So this one here is a 21 and this one here is a 14. We're not going to use those today. We'll use those in a later version of a more advanced setup that I'm going to show you later. But today I'd like to get you up and running with the first of our mean reversion setups. Now this is 75% of the system. If you take this away, you're going to be well ahead of the game. This is a setup that can be used on stocks, it can be used on cryptocurrencies, it can be used everywhere and anywhere, and it's a magnificent setup. If you just know this one thing, boy, you're way ahead of the game. So the rule of the setup is simple. For a long setup, we need 3 things. The first thing we need is a touch of the lower Bollinger Band, which we have here. The second thing we need is, without breaking the low of this candle that made the Bollinger Band touch, we need at least one higher close. Now that could happen in the same bar. Like for example here, we touched the Bollinger and made a higher close in the same bar. But here we've touched the Bollinger Band. The next we need a higher close without breaking the low of this bar. That's element 2, and remember we have a 3-element setup. Our third element is we need a lower close without breaking the low of this Bollinger Band touch bar. So at this point, the setup is complete and we should prepare to go long if we can. So the market at that stage would have looked exactly like this. What we do then is we place an order to go long above this bar. an order to go and a stop loss order protecting us from any sort of untoward losses below this bar. Our target is 1.1 times the risk. So we're trying to make just a little bit more than we risk. Now, it's important to notice that we only go long if price goes above this bar. And we use this by using what's called a stop order, which is a standard order. If this bar is not executed, we move that entry point down here. So now we're ready to go long at the break of this bar with a stop loss here, and our target is somewhere about here. So in this bar, you can see immediately after we hit here, there's a strong reaction, hits our target in the first bar. Now, this isn't some cherry pick thing. This is just like the results for today so far. This is not, this happens all the time. This isn't something that I had to go. Now, so let's look at the same thing in reverse, because it works exactly the same, both long and short. So here we have a touch of the upper Bollinger Band, and we need a lower close. We have a lower close in the same bar. We're waiting on a higher close without breaking the high of this bar. We have a higher close. The setup is complete. We go long, we go short on a break of the low of this bar with a stop loss at the high. We get no entry, but we still haven't broken the high of this bar, so we place another order to go short here, stop loss here, and we get short on this bar. Our stop loss is here, our target is about here, and we hit the target 2 bars later. Make sense? Let's see if we have another one. Okay, we have another one right here. Here, we have a touch of the Bollinger. We need a higher close, and we have a higher close in the same bar. Now we need a lower close, which we have here, without breaking the low of this bar, which we have. So we place an order to buy here with a stop loss here. It's never entered. We place another order to go long here with a stop loss here, never entered. Place another order to go long just here with a stop loss here, and this is never entered, and we've got an equal high. But this next bar, we finally get an entry. You can see the high of this bar up here is 40, and this one is 43. So we get an entry here, and we're long. We're in profit, and we haven't hit the target yet. So the target would be somewhere around here. So let's go over what's happened today again. Well, let's go back and so that we're not like cherry picking results. Let's just start from, I don't know, start from here. We have a touch of the upper Bollinger. We need a lower close without breaking this upper Bollinger touch high. We have it. We're waiting on a higher close. We have the higher close here. So we place an order to go short here with a stop loss here. Hits our target 2 bars later here. Okay, let's find the next one. We have Bollinger touch here. We have a higher close, and you can see the low of this bar is 1.19413. Of an equal low of 1.19413. So we have a touch of the Bollinger, we have a higher close, we have a lower close. We go long here and a stop loss here, and that is a losing trade that hits our stop loss. Make sense? All right, let's go through a couple of others. We have a touch of the Bollinger here, lower close, waiting on a higher close, which we have. We go short on a break of this bar with a stop loss here, and hits the target here. Okay, I hope this is making sense. Now, this setup is really 75% of the system. Now, let's get those rules really in your head. So for a long setup, it's a touch of the Bollinger, higher close, lower close. 1, 2, 3. All right, we're good with that?